So this is our technical segment for major currency pairs, support and resistance levels as seen on March 8th. Okay, we'll start from the world's most popular currency pair, euro-dollar, currently at 105.60. Very frustrating trading, I would say. We're back to narrow range trading. So resistance here at 105.90. I would say weak resistance, but stronger resistance at 106.40. And if we zoom out just a bit, this is the hourly chart, we find further resistance there at 106.80, okay? Even further above, we have 107.60. Looking down, we have 105.20, quite a veteran line, not as strong as it used to be. And below that, we have 104.90, which was a double bottom, which was seen last week. Even lower, we have, well, far lower, 103.50. Moving to pound dollar, quite a fall there. This is our currency of the week. We'll talk about that later on, more in detail about the factors. But anyway, it's down 121.82. Some weak resistance here at 122. Further resistance, another round number 123. Another stepping stone on the way up is 123.45. And then the older line, which is not as strong as it used to be, 124.15 before 125.40. On the downside for pound dollar, we have 121.20 and the very round number of 120.00. Dollar yen, of course, moving up because of the dollar strength. Usually the best measure, the best barometer of dollar strength or weakness, currently just under 114, which I see now is weak resistance, stronger resistance there at the recent swing high of 114.75, and then it's followed closely, 115 used to be strong. To the downside, we have the round number of 113, followed by 112.50, which used to be the top range of, well, a narrow range there, 112 to the downside, and then 111.50. Relatively choppy trading in dollar yen. It's continued to dollar CAD. Dollar CAD is moving up, meeting here fierce resistance, as you can see, a strong resistance line there at 134.35. Just, well, below we have support there at 133.80. Quite choppy over there. Further support at 133, a round number, followed by 132.15, and further below 130.80 and 130.00. Looking up, strong resistance is at 136. Aussie dollar, well, quite a move to the downside right here, but if we zoom out, it's not such a big move. The Aussie dollar has been trading in relatively narrow ranges. So the previous range that the pair liked for quite some time was 76.10 to 77, with this pivotal line in the middle of 76.50. The wider range, if we look down, is 75.40. As you can see, it provided support in February and also now, and to the top side, 77.40. If we zoom out just a bit, you can see that ranges in Aussie dollar are quite narrow. At least the pair tends to stick to a range once it feels comfortable in this range. Okay, so currently 75.60. And Kiwi dollar, this is more like a trend than in our range trading. Much more excitement over here. So we fell here to support at 69.40. Even dropped below that, but so far it's a false break. Anyway. Resistance at 70.40. The round number of 70 does not play a role here in the Kiwi. The pair pierced through it quite easily. Further down, we have 68.80 and 68.20. Looking to the top side, lines that have become a bit obsolete because we've moved to the downside, 71.30 and 71.80. Strong resistance if we have a big move to the upside at 72.50. And we'll conclude the major pairs with the Swiss franc, also moved to the upside because of the strength of the US dollar. 101.35, 103.30, which is out of this chart, is strong resistance. And, well, we have some resistance here at 101.40, not as strong as it used to be. 100.80, 100.40 are sort of dense lines here. The round number of parity, it does play a role, very round number, and also served as support. Further below, we have 99 and 98.50. So this concludes our segment about major currency pairs.
Welcome to a market to end all markets. Welcome to FxPro.